Even if I put my money at the highest point into the S&P 500 before the crash, I'd still have 4 times my money today. The mistake I made was I got emotional, I panicked, and ended up selling off a lot of those companies. The first time I really came across Bitcoin was in 2017 but if I'm decent at math, and if I like to read all this stuff, I should be able to make money off it. Hey everyone, welcome back. Today we're going to be doing a Q&A session where I'm going to answer some of the questions that you probably have for me. I hope you have fun watching this video. If you haven't already done so, please hit the subscribe button. Thank you for your loyalty and for watching the channel. I appreciate it. Well, it's an interesting story. When I was a young kid, the sport I absolutely loved and adored was cricket. Now, for those of you who don't know, cricket is a bit like baseball, but just, I would say, 5 times more complicated. What do I mean by that? Cricket's a very analytical game. And if you want to do well in cricket, you need to be strong in math. You need to be able to calculate things on the spot when you're playing. Whether I was batting or whether I was bowling or I was fielding, I was always interested in the numbers part of the game. In investing, you need to be, I would say, pretty decent at numbers. So the analytical part, the math part, I probably got from cricket. In addition to this, when I was a kid, I loved to read about global events, politics, companies, business. And that's where I got, I would say, the qualitative aspect of investing. Just reading, absorbing information, consuming information, watching the news. When I was a kid, there was no internet. I had to read the news the old way, the newspapers, watching TV. I would say it was a combination of that really then started to get me interested in investing, because then I said, if I'm pretty decent at math, I wouldn't say great, but if I'm decent at math, and if I like to read all this stuff, I should be able to make money off it. Why can't I make money off reading off all this math? So I guess that's where I got kind of the drive and the interest in investing. I was almost 21 years old when I started investing. Was it the right time? Well, in hindsight, I would say yes and no. Yes, because I think it's important to start when you're young, and so that then you have more time for the money to multiply. No, because I started investing in 2007. And as you all know, in 2008 was a market crash. I basically lost about half my money at one point. I think I'd lost more than 50% of what I had invested. And so probably if I started a year later, I'd have much more money now, if I'm very honest. But, that's life, and I don't believe in having regrets on the past. I wish I did, but I didn't. The first time I really came across Bitcoin was in 2017, when I remember I was doing my MBA and the professor told us that Bitcoin had crossed $1,000 for the first time. And in 2017, Bitcoin had already been around for a few years, but I still didn't invest in Bitcoin. I still thought then that this was a bit of a scam. This is not real. And I first put my money into Bitcoin in 2018, but I didn't put in too much. I really started putting in significant amounts of money into Bitcoin or investing into Bitcoin after COVID. If I'm honest, even though by some standards I was late, I think I've still done pretty well, still made some profits with Bitcoin. I still hold Bitcoin. I don't have any regrets that I started when I started. I have made a separate video on Bitcoin. I'm putting the link up here, so if you have time, please go ahead and watch that. Well, as I told you, I started when I was 20 years old, and I bought a company called Wipro. Wipro is an Indian IT company. Unfortunately, I have to disappoint you. There was no logical reason why I bought it. I just saw it on the screen. I heard about it. So I said, let's just go and buy it. So yeah, unfortunately, not a very good reason there. How much did I buy? Well, I think I just bought a few shares. So thankfully, I didn't do anything stupid. I didn't put in all my money into that stock. And so I guess that was a good thing. Well, I would say the best way to describe my investing style is I am what you can call a boring investor. That doesn't mean that you stop watching this video and you go and watch someone else's video. Please don't do that. I wasn't always like that. When I started investing, like a lot of people, like a lot of youngsters, I decided, let's buy the cool things. Let's buy some travel companies, hotels. I bought an airline, and I bought a bunch of other companies. The reality is a lot of those companies don't even exist today. And I learned that just because something looks glamorous, just because something looks cool, doesn't mean it makes money. At least what's worked for me is companies that are, I would say, as I told you, a bit more boring, When I mean boring, I mean more stable, conservative. They are growing, but at a much more steady pace. That's kind of what's worked for me because it also means that those are the companies that pay me regular dividends, stable dividends, and I really like that. I've made another video on this about, forgetting fast money and the S&P 500. In fact, the S&P 500 is something that I invest in and I like that. So I put a video link up here. You can please go ahead and watch that whenever you like. In terms of how I evolved into that kind of an investor, or let's say into an investor where I'm looking at companies more from a longer term perspective, well, I'd say I've lost money, learned my lessons, and as a result of that, I'm not going and trying to pick every company that looks sexy, so to speak. I'm really trying to focus on what I understand, what I know, my, let's say, area of competence. If I feel like I understand a company and it's fairly valued, then I go into it. My main investment goal is, I would say, financial freedom. And I want to get to that stage of financial freedom through passive income, which is why I invest in companies that are stable, funds that are stable, so that I get a steady stream of income. And with each year, that income is, of course, increasing and growing. And I hope one day I can live off that income completely. Now, does that mean I just want to be a lazy couch potato and do absolutely nothing? No, I'm not that kind of person. I like to keep my brain busy with things. I like to read. I like to learn. So I don't think I'm ever going to be at the stage where I want to do nothing at all. But I don't want to be having to go to a job from 9 to 5 every day for the rest of my life. I think I would lose my mind doing that, if I'm very honest with you. Especially because I'm not the kind of person to sit at a desk for 8 hours a day and, jabbing away at a computer. That's just not me. But, we're all different people. And I think it's important that we understand that, you know, not everyone's going to be like me, and I cannot be like everybody else. I think my biggest mistake was when I started investing. As I mentioned to you, I started investing before the great financial crisis. What happened was the S&P 500 went down about 60% back then. And so I'd invested in a bunch of companies, and those companies didn't do very well. I lost more than half my money that I'd invested in. The mistake I made was I got emotional, I panicked, and ended up selling off a lot of those companies. In hindsight, that was a mistake because then what happened? A few months later, all those companies started to rebound and they did pretty well. If I just stuck in there, and in fact, if I'd put in more money instead of getting emotional and panicking, I think I'd have done a lot better. So the lesson I learned was don't panic, be calm, think with your brain, don't get too emotional, and have a strategy so that when things go down or when, the markets go down, you know what you're going to do. Honestly, nothing. I could tell you, hey, I should have just put all my money in the S&P 500. I could have retired by now. I should have bought a bunch of Bitcoin in 2015 when it was worth nothing. I could have retired by now. But you know what? In hindsight, it's very easy to say that. I wouldn't change anything because I think I've learned a lot from my mistakes. I have lost out on some opportunities, but my belief is, and I think this is the belief of a lot of investors, if you haven't put your money into something, you haven't lost anything there yet. So, and I also do believe that every year you do have some opportunities that are coming by. It's about really grabbing those opportunities when they come and making the most of it. So I really don't have any regrets when it comes to my investment journey from the past. Even if I put my money at the highest point into the S&P 500 before the crash, I'd still have 4 times my money today. How many people actually tell you, hey, this is the target price in this amount of time? How many of us are actually doing analysis of how many of those analysts' targets were accurate? Thank you for watching. Please do hit that subscribe button, and please do share the videos with your friends as well. I'd appreciate that. Thank you. I'd like to at this point tell you that I'm not giving financial advice when I say this. This entire Q&A is purely for entertainment and educational purposes, so please keep that in mind.